Welcome to our deep dive on Korean corporate tax. It's March 2025, and that means tax season is upon us. And we're diving deep into deductions and exemptions.
Right. Those are always a hot topic,
Right.
especially for businesses trying to, navigate this complex world.
Absolutely. We know you're particularly interested in how these apply to your business. So think of us as your guides through this tax landscape.
Exactly. We'll be focusing on the 2025 Korean Corporate Tax Training Manual.
And we promise this won't be a boring lecture. We'll uncover surprising facts and use real examples.
Yeah, let's make taxes fun.
Right. Okay, so you mentioned being curious about deal and DRU and DEA, deal gaza.
Yeah, definitely. We're going to break those down for you.
Perfect. So we're essentially looking at two categories here. Deductions specifically for startups and venture SMEs, and then special tax deductions for a broader range of SMEs.
Exactly.
They both sound great, but are there any key differences?
Yeah, for sure. Both aim to help smaller businesses, but they target different stages and types of companies.
Okay, I see.
Like startup and venture SME deductions, they're really focused on those businesses just starting out, getting off the ground.
Makes sense.
They offer some pretty attractive tax reductions, sometimes even up to 100% for a certain period.
Wow, 100%. That's incredible.
Yeah, it is. It's designed to help innovative ideas actually, get a chance.
So the government's really serious about supporting new businesses.
Yeah.
What about those special tax deductions for SMEs? Are they as generous?
Well, they might not be as dramatic in terms of percentage,
Right.
but they're still very valuable. These deductions are aimed at more established SMEs.
Okay.
And they cover a wider range of operations like research and development, energy efficiency, or creating new jobs.
So it's a more diverse set of benefits.
Yeah, exactly. Like
Okay.
a toolbox that SMEs can use strategically.
I like that analogy.
Yeah.
So it's not just about being small. It's about aligning with the government's objectives for economic growth.
Yeah, exactly.
But I imagine there are some requirements to qualify, right?
Yeah, of course. To be eligible for these tax breaks, businesses need to meet certain criteria, which vary depending on the deduction you're looking at.
Okay.
For startups, it could be things like your industry, total revenue, or number of employees. For special deductions, it could be things like meeting environmental standards to claim an energy efficiency deduction.
So you have to demonstrate specific qualities or activities that the government wants to incentivize.
Exactly.
Okay, that makes sense. It's not a handout. It's about contributing to the bigger economic vision.
Right.
So let's get practical here. How much money are we talking about? Can you give us an example?
Sure. Let's say you're a new tech startup
Mhm.
and you qualify for a 70% tax deduction on your first 3 years of income.
That's huge.
Yeah. If your taxable income in your first year is, let's say, 100 million won,
Okay.
you'd only be taxed on 30 million.
So a potential saving of 70 million won right away.
Exactly.
That could make or break a new business.
Yeah, and even for more established SMEs, those special deductions add up. Imagine investing in a new eco-friendly manufacturing process
Okay.
and being able to claim a deduction to offset a large chunk of your tax bill. That frees up capital to invest back into the business.
It's like the government becomes a partner in your success.
Yeah, you could say that they're promoting innovation, employment, and environmental responsibility.
It's definitely a more strategic approach to taxation than I imagined.
It is. It's more nuanced than just forms and payments.
Right.
These deductions and exemptions are tools to shape a company's growth. But navigating the rules can be tricky.
And that's where things get complicated, right?
Yeah.
That's where expert advice comes in.
Absolutely. Tax laws are constantly evolving, and even seasoned business owners can benefit from guidance.
So finding a good tax advisor is crucial.
Absolutely. They can make sure you're maximizing those tax benefits and staying within the law.
It sounds like it's worth its weight in gold.
Okay, so let's dive into some specific examples.
Yeah, let's see these concepts in action.
That will really help you understand how they could benefit your business.
Okay, I'm ready to get into the details.
Let's do it.
It's time to turn those tax frowns upside down.
Exactly. Okay, so let's paint a picture here.
Love it. Let's get specific.
Imagine you're a Korean company and you've just moved your factory to a less developed region.
Okay.
One of those areas the government wants to revitalize.
Right.
This is where the factory relocation deduction comes in. It's designed to encourage businesses to, contribute to regional development.
So relocating my factory could actually reduce my taxes.
Exactly. It's a win-win for the company and the region.
Well, what kind of numbers are we talking about? How does this deduction work in practice?
Well, it depends on a few things, like the size of your company and the region you move to.
Okay.
But let's say you qualify for the highest tier. You could get a complete exemption from corporate tax for the first 2 years after you move.
Wow, a 100% tax holiday. That's a huge advantage.
It is. It gives you a lot of capital to reinvest.
That could make a risky move a lot more appealing.
Right. Especially for a company looking to expand.
It sounds like these location-based deductions are a powerful tool for the government.
They are. They're very strategic. Okay, let's shift gears and talk about investments.
Yes.
Yeah.
Spending money to save money.
Exactly. In Korea, there's this great incentive called the Integrated Investment Tax Credit.
Okay.
It allows businesses to deduct a percentage of their investments in a lot of different areas, from facilities and equipment to technology and software.
So if I buy a new machine for my factory, I can get a tax break on that.
Yeah, it's designed to reward companies for making investments that benefit the economy.
Interesting. So how much can I deduct?
Well, the percentage depends on the type of investment and the size of your business.
Okay.
For example, a small company investing in energy-efficient tech might be able to deduct a higher percentage than a larger company buying standard equipment.
I like that. It rewards smart decisions.
Exactly. And these incentives are always changing.
Oh, really?
Yeah. Starting in 2025, there's a new category under the Integrated Investment Tax Credit called Digital Transformation Assets. It covers things like AI, big data, and cloud computing. All those areas that are driving the future.
So the government's really pushing for digital transformation.
They are. They want to see Korean companies leading the way.
This is making me feel a lot better about tax season.
Good. I'm glad.
But with all these deductions, isn't there a risk of companies taking advantage of this system?
That's a valid concern. And the Korean tax authorities are very aware of it.
Okay.
There are strict rules to prevent abuse. The National Tax Service is very thorough in making sure everything is legitimate.
So there's a balance between encouraging investment and making sure things are fair.
Exactly.
Yeah.
Okay, now let's talk about something that's important in today's economy. Job creation.
Yes, I'm always interested in that.
Yeah.
Especially for young people starting their careers.
Right. Well, the Korean government offers a number of tax benefits for companies that are hiring.
Like what?
One is the Employment Increase Tax Credit. It provides a tax reduction for companies that increase their number of employees. And it goes beyond just any job. There's a focus on hiring young people and people from groups that might face barriers to employment.
That's great. It's not just about the numbers. It's about creating a more inclusive workforce.
Exactly. So how does this credit work? Well, the amount you receive depends on a few things.
Yeah.
Like the number of new employees you hire, their age, and whether they belong to a targeted demographic.
So there's a sliding scale based on who you hire.
Yeah, a company hiring someone under 30 might get a larger credit than if they hired someone over 40.
That makes sense.
Yeah.
And it encourages companies to diversify their workforce.
Right. And there are also benefits for investing in your existing employees.
Really?
Yeah, you can claim deductions for employee training programs.
So it's about investing in people.
Exactly. It's all about human capital.
It seems like the Korean tax system is designed to benefit everyone.
That's a great point. It's not just about collecting revenue. It's about guiding businesses towards positive choices.
Choices that benefit the whole country.
Exactly. Now, we've focused on the positive side, but it's also important to understand the potential downsides.
You mean like penalties?
Yeah, nobody likes talking about penalties, but it's important to understand the risks.
Okay, I'm listening. What kind of penalties are there?
Well, one of the most common is the late filing penalty. If you miss the deadline, you'll have to pay extra.
So no procrastinating when it comes to Korean taxes.
Right. The penalty is a percentage of the unpaid tax, and it keeps growing the longer you wait.
Ouch. So what other penalties are out there?
Well, there are penalties for inaccurate reporting, for not having the right documentation, and of course for any kind of fraudulent activity.
So if I intentionally mess up, I could be in big trouble.
Yeah, you could face hefty fines or even criminal charges.
Yikes. It definitely pays to be honest and accurate.
It does, and a good tax advisor can help you stay on the right track.
Absolutely. Okay, so we've covered late filing and inaccurate reporting. What else?
One more thing. Penalties related to tax invoices.
Tax invoices. Those seem pretty straightforward.
You'd think so. But there are very specific rules in Korea about how they need to be issued.
Oh, really?
Yeah, and what information they need to include if you don't follow those rules. Both the issuer and the recipient can be penalized.
Wow. So a mistake on an invoice can affect multiple parties.
It can. Let's say you issue an invoice that's missing some key information.
Okay.
Like your business registration number or the correct tax codes. That's a penalty for you. And if the recipient uses that invoice for their taxes, they could get penalized too.
So one error can snowball into a bigger problem.
Exactly. So having a good system for managing your invoices is crucial.
Especially with everything becoming more digital these days.
Right. Electronic systems can help ensure you're compliant with all the regulations.
This has been so informative. It's clear that understanding the Korean corporate tax system is essential for success.
I agree. We've covered a lot of ground today, from deductions to penalties.
It feels like we've really gotten a complete picture.
We have. The Korean tax system has incentives and deterrents to encourage responsible behavior.
And to create a fair environment for all businesses.
Exactly. So let's recap some key takeaways for the 2025 tax season.
Sounds good. Let's make sure our listeners are ready to go.
First, Korean tax law is always changing, so stay updated on any new legislation or updates.
Don't fall behind on the rules of the game.
Right. Second, documentation is key. Keep all your records organized and accessible.
Be prepared to prove your claims.
Exactly. Third, don't be afraid to seek professional help from a tax advisor.
It's an investment that can save you money and stress.
Absolutely. And finally, remember that tax planning should be an ongoing process.
Don't wait until the last minute. Be proactive throughout the year.
Yeah, if you integrate tax considerations into your business strategy, you can make better decisions and minimize your liability.
This deep dive has really empowered me. It's amazing how knowledge can turn a dreaded task into an opportunity.
That's the goal. We want you to feel confident navigating the Korean business landscape.
So to all our listeners out there, happy filing. May your tax season be filled with deductions and free of penalties.
And until next time, keep diving deep into the topics that matter to you.